Good afternoon. It's Saturday, 3 p.m. again. It is our time to really discover what we don't know or adding into your knowledge basket another thing for you to consider in the future. So every business owner, when you start a business, you are actually walking through a journey to complete that journey. So whether you complete your business by passing on to your children or getting a new partner to be part of the business, so you are starting it up, you grow it, then you figure how to expand or how to sell, and then you go on with your life and even finish your life, right? So that is just a normal business process. That is one of the reasons I was writing these 4 books. And the first book is Start a Business. The second one is To Grow. Then the third one is actually the one I am talking to you about today. Then the 4th book, which I have no idea what that will be yet, it is actually a book about retirement. I believe the word of retirement is different from what we were thinking or what our parents were thinking or doing. So with that said, let's get on with our program. Today, what we are doing is we are exploring the journey, the business owner's tax journey in selling the business. So obviously, emotional journey is a whole nother subject, right? So what we are doing here is we are trying to get the selling things not a mystery for you, and to give you tips and understanding so you know exactly when you want to sell your business or even when you want to buy a business, what you should be looking for. If you know how to sell a business, obviously you know how to buy it. You will probably be one of the best buyer because you understand it. You understand what you're buying, right? So let's get going with that, and I will be showing you our website. This is a site. This is actually a YouTube channel. Our website is right here. I brought you to our website because I really want you to know that you have every freedom to find out what kind of schedule the partners have. So you can get on the partner's schedule and to make an appointment. These are all the partners. And if you click my name, and you will come in to see the open time that is available for you when you look at the schedule. So with that said, I want you to know that our website not only is a website just for the sake of people looking. You book appointment, you can also pay your bills to us. That's a support you give us, and we really appreciate that. And we also post our jobs opening on our website, so you can look to see whether this is a good fit for you or your children to become an employee of Community CPA. And we also have a YouTube channel, as you know. That YouTube channel is a collection of all of our videos we have done from, maybe 4 years ago. Yeah, close to 4.5. So we started doing YouTube channels consistently for that many years. So we have over 1,000 videos on the channel and about 5,000 subscribers. So I would encourage you to subscribe to our channel and then let your friend know about us and have them subscribe to our channel. Our topics are very business related. So if you want to accumulate business knowledge, getting into a habit, listen to our webinars, that would be the best way to learn it easy. We don't have sophisticated language here. I myself, English is my second language, so I don't know how to talk Harvard language, but I do understand what's going on the tax side. Because of my background, my understanding of tax is a lot deeper than someone who are just here in US. I actually immigrant from Canada, so I'm very familiar with Canadian, Australian, British tax accounting system. And we have, our firm originally 27 years ago, it is known for the international tax side of consultation. So that was kind of the piece I have been working and people know me for that. So if there's anything related to foreign country, anything related to foreign vendor, and related to foreign employee, you call them employee, and those are the things you can check with us. We just have wealth of knowledge related to that. Now let's get back to our PowerPoint I prepared for you to guide us through today's talk. And we are talking about selling your business, and that is me. That is my book, and it is the first book I wrote in 2019, and it's called Appointment with Ying at 8 a.m. It talks about how to start up a business. So I just published the second book. It's called Appointment with Ying at 10 a.m. That book is to talk about how to grow a business. Thinking of, starting up a business compared to growing a business is so million times easier. I can't even tell you how much of a mind and, mind shift and, your mental, your philosophy, all of that need to shift before you can bring a baby business into a mature business, grow your business. Now, if you are arriving at where those mature business are, you are thinking of either merger, acquisition, organic growth. You're looking at ways to expand. And I am actually doing a seminar the Synergy, Thomson Reuters 2023 Synergy. So I have a session where we talk about how to move CPA firms from 6 digits to 7 digits. So that is a mind shift. And you can always do a CPA or tax preparation small firms somewhere for $200,000 a year. But to do a $2 million or even $20 million a CPA firm, that takes a growth mind. So I write about that in the second book. And of course, my third book is coming up. And this is the second book, Appointment with Ying at 10, Growing Your Business. My third book I'm writing right now, so I'm trying to get that out when I arrive there. So that is always my goal, to arrive at a place I can talk, then I can give you my experience and all of my other clients' experience, making that reading, understanding meaningful to you. Of course, you want to know that everything you get from internet, including these webinars, there should be a disclaimer for the audience, because we are not perfect. Time expires knowledge. Knowledge didn't catch up on time. So there are reasons for things were taught differently, or even the content is correct, but your understanding is different. So making sure that you don't use these fluid knowledge online to back up your decision. When you have a decision, you want to make it very sound by consulting with professionals, by coming to Community CPA, talk to me, book appointment with me. So that way, and I can make sure that I understand your situation, then I give you that solution just fit for you. Okay? So that would be, the prep talk before we get into. There are two questions. I call them $1 million questions because I get that all the time. And obviously, I don't charge $1 million to answer that question, but I mean, that's going to cost you $1 million to really find the answer. Not so much of you paid someone, but it's your experience. It is what you need to know on your own. Really, no one can help you. But I want to bring these two questions to you so you know exactly what that is. So is it a time to sell? That is $1 million question from our client, and they don't know when to sell. They run the business, they're tired. 1 year they come in, oh, I'm really tired. I don't really want to do it anymore. Is it a good time to sell? Or you have someone really going so well, so strong with the business, came in, Ying, should I sell? You see how it has nothing to do with whether you make money or lose money? It has something to do with your strategy. It has something to do with what you want to do with your life. So in the end, when to sell is it a time to sell? That comes within. You really need to know. And at one time, in fact, I'm dealing with quite a few clients, in their late 60s, they discover their children just not going to don't care about their business. So they have nobody to pass that on to. The employees who worked in the company had already left because they couldn't see the future of the firm. They don't know whether the owner just gonna run it to the bottom or they're gonna sell to them or what is the deal. So there was no communication. So these older baby boomer folks and don't have a solution to when to sell, how to sell. As soon as they talk about selling, they felt like they can still work on it. As soon as they feel tired, they want to sell. So they are back and forth in that loop thinking, right? So my guidance to that kind of fundamental, undecisive nature of human being is to count on how many times you want to sell. If in a month time, you had more than 3 times situation that make you feel like you need to sell, it is time to sell. Okay? And if you are doing so good, but the business itself doesn't have a future, temporary business, and I'll tell you what that is. For example, those companies who form themselves to do ERC credit, those are agencies. Oh, they don't need any license. They don't need any certificate. They don't need any college education. They can just put their body together, form an agency, they apply ERC. How long is ERC gonna last? The last batch you can apply for 2020 credit ends in April of 2024. Then April of 2025, and you're ending 2021. So there's not a lot of time. So these people who made a lot of money, they know they're gonna close. They know it. So if they can sell it, wow, that would be wonderful. Anything you give, they will sell it. Okay? So with that said, it really depends on what business you're in. If you are in the business, 2 years later it's going to be banned or technology can replace it, you no longer needed it, you would close. And right now, what business is growing really, really big and it will close in less than 5 years? You know what they are? These are the manpower agencies. The agencies now tell you that, oh, I'm going to hire someone from India and you pay $9, here you pay $19, save a lot, you hire me, pay me. Those are business. It's a great business opportunity and the business people are smart. They came up, they formed these companies, but do you know what is going to replace this business? Artificial intelligence, IT. There will be no more needing of those clerical, no brain needed kind of business. So like a clerical job, it will all be placed by artificial intelligence. Artificial intelligence are technology, right? So they will be wrapped around with so much security and you would be doing it in US. If it is US company, you can do it in US. So with that said, those are temporary business, folks. Those kind of business doesn't last to the next generation. But there's a kind of business do last to next generation, folks. What type of business does that last? Manufacturing, right? An example, insurance company and the insurance agency also can last to next generation. CPA firm, law firms, those architecture firms, if their children happen to be architecture as well, they can go on with the business, right? So those business are what we call legacy business. So it depends on what kind of business you have. You're going to decide on when to sell. You better sell it at the right time so you make the money. With that said, I listed the reasons for my client. The reason from my clients, they sold their business or selling their business right now. Health problem, very frequently seen. No more passion for the business, just hate it. Just hate it, don't even know why I got into it. And if you have that kind of negative passion for your business, folks, do you know that you're wasting your life to even hold on to it? I would say that put on the facade and pretend you like it and get that sold. Someone would love it. Someone would love that business, even though you don't like it. So try to sell it, right? The new interest outside of the business, got a new date, too much time, and no time for business. I need to enjoy my life, right? So that happens to my client. And, this client of mine, always discover the new ladies that he fall in love with is always the most important thing in his life. Then the business put on the side. And then the relation fall apart, then business got picked up again. So it's just like back and forth between business and a lady. So those kind of thing, sell the business, focus on a lady. So that way, maybe that relationship lasts, right? Or there's reason that the owner becoming the dead weight for the business, didn't really attend the business matter, but yet controls everything. And as simple as, doesn't sign the checks, but there's expenses need to be paid. So those business owners, they really are not in the business anymore. And I feel bad for, a good business to be wasted in that way. And business owners' kid just zip the business. They don't want it, That's the biggest reason a lot of baby boomers are selling their business. It's not because the business is not a legacy business. It's because the business owner has nobody, or they dreamed of somebody to take it over, but they did not. All right. And the other thing is the spouse. Spouse matters, If they tell you that they don't want to do this, you better listen, unless you are ready to trash that relationship, right? The owner need to diversify and or partnership differences. So what it says here is that when business grows to a certain size, maybe it is time to bring people in as your partner. So you're not just one owner anymore. So you can see that kind of in the community CPA journey. And we used to be one person firm for the longest time. I want to say that maybe for the first 15 years. Then we actually start to bring the senior, the long-term, the employees who are at the firm for a long time to be partner. Of course, they're also extremely smart, so they become partners. So you can see that even a community CPA that got established by me back then, and I'm the only owner, but now I am looking for partnership. So that tells you that it is time to do that, because I myself cannot hold on to all the knowledges and the specialties. We need people to come together to make a bigger dream, right? So it's also some of the time people selling their business is literally a retirement exit strategy. I admire these people. They're so calculated. They're so go by the steps, right? They have no surprises in life. Everything is planned. Everything is going by the books. I will tell you that I have 10,000 clients. You know how many people I would classify them to be like that? How many? 0. I heard of them. And occasionally I maybe meet one of them, my friend or somebody. Maybe they're not my clients, so I don't know their real story. But if they tell me that they're gonna plan for this, plan for that, I admire them. I think they're great. They calculated every step of their life. But in reality, business owners are so scrambly, and it's almost like chaotic life, and other people don't see. And you and me, we know as a business owner how chaotic life is, right? And I have never met a business owner goes, my life is so easy. I'm so happy to be a business owner. Everything is made for me and I'm just so easy. Never ever. I don't think that happens. The second $1 million question is how much to sell. I've been asked that question all the time. And sometimes client will say that, oh, Ying, I want to sell my business and I need to hire a business evaluation person. Tell me how much my business is worth. Really? You need to hire someone to tell you how much your business is worth? And that business valuation is not you doing it for your business. It is the buyer doing it for your business. Don't get confused, okay? Did you hear me? When you want a business valuation, because you want a business valuation for the business you buy, because you do not know that business 200%. So you want that valuation to suggest how much you should pay. But if you are selling it, you don't need a business valuation. It is right here in your heart. You know. Sometimes that value is not about how much your business is worth. It's about how much you want to get. It is about how much you need it for retirement. It is about how much you hated your business. If you hate your business a lot, you're actually going to trash it to $1. And if you have a retirement goal, you know that you need the $600,000 to pay bills to live the rest of your life, and you're going to ask for $600,000 to the buyer. You know, otherwise I have to continue doing my business for a couple more years so I can get that dollar. Very simple. Or you know exactly what you want, and I want to show you that. So in this thing, you saw a real number. This is not a made up number. This is a business that is going to sell, and it came to me yesterday. And the owner has the business. And this business is actually a law firm. Okay, so but we can kind of play the number into the manufacturing, into a restaurant. We can play these numbers, and I want to explain it to you. Okay, so now let's think about this. You have your income statement. You know your total sales. So the law firm generates $7 million sales. Okay, and then they have $7 million expense. So at the end of the day, there's two partners in the firm. So the two partners shares the $300,000 net profit. That's all. Very simple, straightforward business. So they want to sell. Let's look at their balance sheet. The current asset. Current asset normally is what? Normally is a bank account, investment account. In the restaurant business or a manufacturing business, you have inventory also in the current asset. So that's a 1.7 million. And the equipment. Can you imagine what equipment would be in the law firm? I would thinking furnitures and the computers and maybe these recordings for the courtrooms, you know, those kind of things. 700,000, that's the net. So that means they bought it, they depreciated, the net left is 714. Total asset is that it is the total asset, the current asset plus net equipment. So equals total asset is 2.4. Okay, now, and they have asset 2.4. So this asset is owned by what kind of structure of money? By two kind. Liability 1.7. That's the loan they have. The company has a loan. Total equity. That is what left over in the equity that got distributed but didn't get moved out of the company. So it's 600, like 700,000, let's say. So the total liability plus equity is equals to the total asset. So we got those key numbers, right? So let me tell you how many ways you know your business worth. So this law firm, these people, they could sell their law firm for 1.5 to 2 times of the $7 million. That is what? It is 1 time of the sale, or 1.5 to 2 times of the sale. Yeah, that is one-way selling. That is a one-way selling. So they could ask for 14 million. Or they could ask for 7 million. You see how they come about to sell it based on the selling price in 1 year, okay? Talking about this is 1 year. Then they can also sell it for multiples of net profit. So now your net profit is 300,000. But when you are doing multiple of net profit, you need to add back those 2 lawyers' personal salary and stuff in here. Because we should not count these owners, right? This is a real profit because when they sell, the owners is not here anymore. So their salary not going to be paid out. So let's pretend they pay themselves $500,000 a piece. So it's $1 million add back to 1.3 million. And then net profit 3 times. So they can sell it for what? They can sell it for 3.9 million. Okay? So multiples of net profit. multiples of sales. So that on income statement, that is how you can play. You know what you want to sell. You just look at the numbers and decide. Then you may ask me, okay, Ying, I don't know what is multiples. How do I know how many more times I do? Very easy. Nowadays is very easy. You just go online and research your type of business, how they sell. And if you ask me, I researched about law firm. And in the last 2 years, the multiples went down. Before pandemic, almost two times of the sales. But now, after pandemic, for whatever reason, it is kind of at 1.3 right now. That means these people can sell for 9 million, right? 1.3? All right. So that's one way of doing it. So there's other ways to do, to evaluate, to know how much value your business is. In that case, a lot of time, let's say we pretend this is a retail. Let's say this is Younger. Yeah, of course not Younger. But the reason I want to use a retail because that current asset 1.7, in this real case, that 1.7 is actually what the money that they have in their bank, different investment and stuff. So it's 1.7. And the equipment is real equipment. So if they sell for 700,000, and they would not pay taxes because that's a net equipment value, and they only just sold on the book value, right? So, but if they sold for 7 million, yeah, that equipment is just a lot more than 7 million. So we'll talk about the selling method, like the way to sell by shares or by equipment, which is asset sale. But for right now, I want you to understand that, let's say that 1.7 is inventory. When you sell a business, the buyer need to buy your inventory. So there, you already need a 1.7 from inventory, right? So whatever you sell on the multiples we talked about on the income statement, you need to add that inventory for yourself. Of course, equipment you would sell. So your total asset is 2.4. Then you could sell by your total asset. So you could say that I hate my business so bad. Even though I made money, I don't like it. Even though my sales is 7 million, oh, I wish I didn't even have this sales. So I'm just going to sell it for 2.4. So that total asset is another way to sell. Okay? So you can sell it more and you can sell it less, but that become a benchmark as well. Now, what about equity? So liability, you certainly don't want to take over people's liability, right? So there's only one way to sell your business. You don't have the liability. We will cover that soon. But in here, the equity means that the money you already, in this case, is an S corporation, is a law firm. This 669,000 means that they, or the owner, the shareholder, already paid taxes for it. They just did not draw it out. So you can imagine that when they sell, what they're going to do? They're going to draw that amount out. If you don't give to them, you give them as a part of the sale, at least the sales need to be bigger than 699,000. Am I right? So that equity is a portion that must be recovered because business owner not going to sell for loss. Unless you hate the business so much and you just decided to hate it, trash it, worth nothing, then of course you can claim capital gain, capital loss, that's fine, right? So that is where those numbers come into play. So now I'm summarizing how much to sell. And the answer is we don't know. Depends on how you look at your business, okay? And it will be very silly for you as a business owner, and don't go to your CPAs to ask for what my numbers are, but instead trying to tell the business evaluator, say, hey, evaluate my business. You know what they do? They're going to go back to talk to your accountant anyway because they can't cook the meal without the rice, right? So they have to have it. So in terms of how much to sell, the sales total is an indicator. The net profit is an indicator. And the total asset is an indicator, and the current asset inventory is an indicator, and also your equity is an indicator. So with that said, you see, income statement, balance sheet are so useful, and you cannot live without them. Now, so to make it tax efficient, we always tell folks that you plan the sales ahead of time. Really need to. You calculate your desired bottom line first, folks. You know, I say that so many times, because you know that if you don't have a bottom line, you tell yourself that, oh, I'm just gonna ask people how much they want to pay me, so I'll be done. Do you know that if you do that, it doesn't matter you made a good sale or a bad sale, you would not be happy because you have no bottom line. It's almost like you don't have a ground zero. How do you measure your body height? You can't. You may be negative in the basement, right? So you need to know your value. It doesn't matter what that is, you need to know. So I already kind of gone through a statement with you, show you that what can become your bottom line. So you want to calculate your desired bottom line for your business before you sell. This is not a business valuation. Your buyer will do business valuation for you. Have them do it. They want to buy, right? All right. And when you sell, and you don't have to go to a brokerage firm, have them represent you and sell and have, pay that commission, right? A lot of sale we see around our clientele, we have more than 10,000 clients here. A lot of sale is actually happen between the partners, between the employee and the boss, and between the family members, and or in the community. And for example, a sale I'm handling right now is actually within the community because they all speak Vietnamese. So they are coming together and selling the business. You can see that selling, you can say that, it's a matter of luck. I just need one person come out of the blue to buy my business. But a lot of times, this one person is right around you. That's what I'm trying to say. So you can also find a broker to do that. We have clients, their business is pretty sizable. They don't want to stir up the customer to make customer know that they're selling. So what they do is they sign agreement with a broker. The broker help to find a buyer. So the buyer sign non-disclosure agreement, okay? NDA, non-disclosure agreement. They sign it. So they cannot talk about your selling. So make sure you got that sign, right? And the point to consider, you want to make sure that your sales sources, whether it's a public or key customers. What I mean by that is, let's say 100% your sales are coming from people walking from the street. Then you have a very solid sales. Because even if you are not there, customers who don't really care to know you, they still come to the store to buy things, right? Or to do business with you. So your reputation, your goodwill is there. So that is an income source. Buyer value that. Buyer's valuation actually would do analysis on your clientele. And if community CPA is a CPA firm, only have 5 customers. We're big, we make a lot of money, but we only have 5 customers. And you think people think it's a good business? Evaluator will come around, goes, your business is worth nothing. Because you have the 5 customers, if one of them walk and you are done, which is so true, okay? And in our business, every year when we buy professional liability insurance, one of the questions they ask is, who is your biggest customer? What percentage that is on your total sales? You want to see that percentage to be 0.01%. Because the littler that is, the sounded your business is, the higher price you can sell. Okay? Owner's skill set. And you don't want any part of the business is related to the owner. If you are selling your business and you tell your buyer that, oh, I'm so good, I answer everything, I know everything. When you buy my business, I will teach you. that is a letdown. Don't say that. Because the buyer knows that when he paid you money, you'll be gone. You'll be in Hawaii making long distance call. Then you will say the connection is bad, can't really help you. Can you wait until I come back to here? Forget it. So if you say that, you cannot sell. And as a real good seller, when you sell, and you want to make sure that the skill is disseminated in the business, you are not important. You're important to bring the birth of the business. You're not important for growing the business. Okay? And the sales profit, of course, important, asset value. All right, so ways to sell your business. We're getting a little technical, right? So now we got our value and we know what we want to sell. And now, so how many ways can I have to sell it? So there's different ways to sell, right? One is, for example, there's an asset sale, there's a stock sale. So ownership of your company's share, you can sell. And in the earlier example, the two attorneys can sell their shares. But is that really good to sell their shares in this case? Maybe not. Remember, they have loans. If they sell their shares, that means you're going to buy their loans too. You're going to pay the loan. All right? So what is the value of the share? The value of the share is actually in equity. So if they have 2 shares, in my earlier example, then each share is about $300,000 right now. That's what that is. So you can do partial sale, share sale, which means that you can sell a little bit of the shares to somebody else. So that probably means you're going to bring a new partner, right? New shareholder. And you know that sometimes you know a law firm, they used to be, Smith, what was the other last name? So they have 3 last names. Then suddenly one drop and replace a new one, right? You saw those names changes. That is effectively a share sale, okay? And then of course, employee stock option is also a way to sell the ownership to employees. And trust me, that is a very comprehensive way to sell business. If you ever feel intrigued about doing employee stock options, and I want you to first come to talk to professionals who has done that before. See, I said that who has done that before because it is not easy. And it is also very tricky to maintain. A lot of times, a plan got set up, already spent $250,000 to set it up. And then in 2 years, it went belly up. It didn't work. It didn't work with the employees. The employees don't care. Things fall apart. So there's just so many things related to that. In this webinar, we don't even go there. We just want to tell you that you can sell shares and you can also sell your asset. In this case, remember we saw they have asset. They have net equipment and they also have inventory in the retail case, right? So you can buy inventory, you can buy asset, you can buy business like that, but don't buy their liability, right? So that's the ways how you can sell in general. So let's quickly cover the impact of tax liability in share sale. In one word, if you sell shares to the other person, you're going to give your EIN number to that person. You're going to give all of your business to that person. So that person is going to be just like you, replace you. Business doesn't change. Liabilities stay on. That means the buyer who buys you, they're actually buying your liability as well because they bought shares, right? So your share sale. Now, the other one is asset sale. Asset sale just means that you count on all your inventory, your machinery, and you can even sell your client list, okay? That's your intellectual property asset. And you sell. In this sale, you don't get rid of your liability, folks, because you're selling your asset. But you're gonna left with the company EIN number and your asset become 0. You're done, okay? Because with no asset, how are you going to run the business, right? you probably would have agreement with the buyer already to say that you're not running the same business again. You know what I mean? So with that said, you actually ended up having a business. So you have to go through close, file your last tax return. Pay the taxes you need to pay. And, go to Secretary of State and then close your business. And then go to Revenue Department, close the permit. And you go to employee insurance agencies, close all the insurance. Call up your insurance agent, close all the liabilities because you're done, right? So those are the things you need to do. But if you did a share sale, what do? You don't call. You don't call anybody. And they are still running your business. It's just not yours. So occasionally, you're gonna find a customer or your customer calling you and complaining about whatever the person was doing. Then you just kindly tell them that, you know what, I sold my whole business, the whole business to this new person. I don't do this anymore and don't call me. Because you don't have a very effective way to cut it off, except you are just going to tell people who contact you saying that you're no longer the business owner because they're still running your business with that EIN number. So maybe IRS got excited and decided to honor you. 1 year you still own, the other year it belongs to the new owner. Boy, that would be a basket case of worms, not even a can of worms. It's a whole basket of worms. But if that happened to you, rely on professional. We have dealt with situations like that. And, this is really kind of theme to say that when people are in business running for a long time, and especially people like us who look at all the businesses, right? So we actually see this happens to other people. And when we saw that happening, going through, sort it out, and apart them, and settle them up, that is a work of art. That is not attorney's job. That is not an accountant job. That is a psychologist plus accountant plus attorney's job. So I often tell our client that when they are in dispute with their business, both businesses are cross-connected. And we always say that if you work with accountant is the one that can find win-win situation for both of you just by sheer numbers. So we calculate, we do one scenario to show you, another scenario to show you. And then both of you sit together, even though you don't like each other, but we find a agreeable, acceptable middle line. But if you two, one goes to lawyer A, the other one goes to lawyer B, and a solution that could come up with your accountant by running numbers, it will become a numbers your accountant still have to run, but all runs to the court. So don't do that. I always tell my client that don't deploy the attorney's power if you can utilize your own logic with the person that you work with. Buy and sell is not easy. It has a lot of things to think about. Attorneys who are specialized in buy and sell can be a huge help, but attorneys who are not specialized in the sale, buy and sell, but really big in your right, you're my client, I'm going to fight, I'm going to fight to my death to protect you, man, that will be a civil war. I don't know. At my time, with my experience, with my age, I don't like that. I don't think business people should do that. And I don't want you to blindly running into resolution via legal means versus just sit down, calculate numbers, and making sure that it is good, and then we're done, right? So that is really the liability. When you do asset sale, you get away from that business because you still have your business. You can close it properly. You just sold your asset to them. But what is the drawback on the asset sale? Asset sale would trigger two kind of income. You know how capital gain? So one income is actually called depreciation recapture. The other income, depreciation recapture, is ordinary income. Ordinary income on our tax forms, folks, you can pay tax all the way to 37.5%, and plus the other 3% on investment tax, and you're probably running about 41%, right? If you sold a big price, your taxes on ordinary income is going to be huge. But there is another kind of income you get when you sell business. It's called capital gain. So capital gain is capped at 20%. So that obviously is beneficial. So asset sales triggers that, because remember that asset on that book was 600 some thousand, but actually original value was 1.4. So they wrote a lot of depreciation away already. So 1.4 minus 600,000, so they actually have about 800,000 regular income. If they sell the firm, if they sell asset for $2 million. So that is a huge amount of regular income. Then the rest become capital gain. So it is something to consider, folks. When you decided to sell asset or to sell by shares, you want to talk to professionals. So if you sell shares, there is a chance for you to be qualified for Section 1202 exclusion. I'm just going to quickly run this down, right? So the qualification is right here. It says what kind of business can do the QSBS exemption. The exemption is basically for small business. What we see is you don't need to pay taxes because $10 million capital gain is exempted. Isn't that cool? That's cool. Yes, very, very important for you to know. If you don't know, just stick this in your head, thinking that now I know there's a thing called 1202, or you say, now I know there's a thing called QSBS. You know, I hate those abbreviations, make no sense to me. And I always, when they have a QSBS, and I feel like it's a little jar with the worms goes in, and the 2 jars with the worm goes in, so that's QSBS. That's how I see those things. I don't even, normally sound it out. I just think that 2 worms goes into different jars, right? And you want to remember those. You want to remember that just in case you qualify. Not everyone qualify. There is, normally when we do QSBS kind of work, we do eligibility study first. So Dr. Howe in our company, he's also a partner, and he does eligibility study for all the tax credit we have in the firm. So that way we do it right, do it accurate, and you can sleep and you know that you will never need to pay that money back if we tell you that you qualify. So that is the eligibility study process you need to do when you sell. You see how that is so important when we talk about selling business. Just please don't sell business like when you get rid of baby diapers. It's just like, time to change, let's do it. No, don't do that. It is a lot more sophisticated and worth of your time and energy to go through the planning. Okay, of course you can do installment sales so it doesn't crash into your 1040 with so much gain and kill you from get-go. So that is a solution you can thinking, right? So now I want to draw a conclusion of all of these talk we have today. Like we talk about selling, and we talk about how we need to have a baseline, not a business valuation report. Why do you need a business valuation report? And the buyer need one of your business. You don't need one for yourself because you should know. And plus, the valuation report doesn't reflect your emotions anyway. You may be loving this business so much that you want to sell more, right? Just like people sell their house. There's always a market price, but this housewife, house lady, and just love this house so much that she said to the buyer that whoever moved into this house, their kids would go to Harvard. intangible value. That goes, selling more, right? So that value, that bottom line of your business, only you know. But you must have it, because when you have it, that is your baseline. And when you sell more, you're happy. You know that you had it and it is more than what you wanted. And when you sell less, you measure whether it's worth of giving up or not. With that said, baseline, very important. Then you want to consider sales, how to sell. You can sell by shares, you can sell by membership, you can sell by asset, and you can sell nothing but client list. You can cut it up and sell any way you want, like a car, right? Like a used car. You can sell the car as a whole, or you can sell the car by pieces. It doesn't matter. It is a sell, right? So with that triggers tax side of treatment. If you sell share sell 100%, then the company goes to the new buyer, and you actually have a share sale, so that's a capital gain. Capital gain taxes is 20% maximum. But if you sell asset, you have recapture gain, that is an ordinary gain. Then you also have capital gain, ordinary gain, you have both. And the ordinary gain just charge a lot more taxes than capital gain, so people don't want it. But of course, it's more complex, depends on what kind of business you have. If you have a C Corp, then you sell, then you're going to be paying taxes when you distribute that to yourself, right? As a dividend. So there's a lot of tax loops in there. I just want you to hear it. You don't need to know how to do it, folks. You don't need to know that. Elon Musk doesn't care how his tax is done, but he just understands the concept. He has a lot of R&D. And depends on what business you have. Before you sell, you want to make sure you claimed all the business tax credit already. Did you claim R&D? Did you do ERC? And did you have work opportunity tax credit? Come on. These are normal things you should know. Okay? So with that said, prepare your sell, right? And now, be sure, I have this last slide here. And I want you to say that when you're ready to sell, I want you to talk to your loved ones. It could be the girl you just dated yesterday. It doesn't matter. Just talk to someone that passionately with you, because I think that is the time where you are really neutral to your business. Because when you are with someone, occupies your feelings, and your feeling towards to the subject of talk, a subject of the business is very neutral. It helps you to see it straight. Okay? And then talk to your children. And the children are terrible, okay? That's based on my experience. So you are just going to hear them, but you don't have to necessarily taking their input as input. And one of the children may say to you that, well, I don't like your business, but maybe this girl is studying something that your business is operating. Even though she just told you, trash you, I don't want to work with you, Dad. But she actually studied engineering, and she can be a qualified employee in your firm. If that is the case, I'm not sure I give a damn of what she's saying. I would just figure out whether she would be mature enough, maybe come back to the business, right? Maybe you should not listen to them, should not sell, right? I'm just kind of giving you what I see. It's not like I have all of the experience myself, right? But I have clients, 10,000 of them, and I talk to them every day. I have more than 1,500 appointments a year. So you average that out, it's like a lot of a day. Yeah, I have appointments every day, 7 days a week. And now with the internet, man, my appointment is getting doubled just because we don't have to meet anymore. It's just all online. So with that said, and you want to know that this is the option, I'm telling you the world you do not have a chance to see, because you only run one business. I watch 10,000. Okay? And you want to be connected with CPA firm like Community CPA. And I say we are the best CPA firm. I say it from the bottom of my heart, but I know the reality is there's other CPA firms are also very good. We all have passions for what we're doing, so my passion drives that decision. I think community CPA fit you. But if you have someone like your nephew is CPA, or he's the attorney, you know this kid and he always helped you, and you use this kid. You want to find someone who is close to you and to bounce the ideas and talk trash about it. Just talk about selling and don't have to take responsibilities, and just a thought. And with those kind of talk, it will slowly form a formula for you. That's needed, okay? So I want you to discuss the desire. And to prepare for selling, that takes time, folks. At Community CPA, one big thing we do is, as soon as you tell me, I am going to sell my business, if I am the one did your last 15 years tax return, you know what I do? I actually summarize all your equities. I am looking through all your return to make sure that we're landed at the right place for you, and I will calculate how much taxes you might pay if you sell asset or you sell the share. So we give you that option so you know what to choose. Then in terms of buyer, and we will tell the buyer, because whatever we sell, the method we sell has a similar effect on the buyer. So we want to make sure that the buyer understand what's their tax responsibility and advantage as well. With that said, we conclude today, folks. You can email Catherine at communitycpa.com. Always know that we are passionate to help you. It is not because it is our job. No, it is our lifestyle. It is our belief. It is our mission. So it is something we do every day, every minute. So don't hesitate to send us an email. Tell Catherine what you want to know and learn. We will put that on the YouTube channel for you. And know that we are a CPA firm, opens 6 days a week. Yes, Monday to Saturday. So on Saturday, when you have a break from your business, you can pick up the phone, call us, and we'll be available. And I'll talk to you again.